The 2025 bull market is on a tear. But are you paying attention to what the world's top financial experts are saying behind the scenes? They're issuing some quiet warnings about a hidden danger that could catch millions of investors completely off guard. We're about to break down their urgent warnings about the unprecedented tug-of-war between economic growth and stubborn inflation, and reveal the strategies they say are critical to not just survive, but thrive. These are insights you can't afford to ignore. On the surface, everything looks great, right? The economy is showing real signs of fundamental growth, and we're seeing pro-growth policies that could keep things expanding. But that's only half the story. Underneath this rosy picture, a serious economic conflict is brewing, and it's what has experts so concerned. On one side, you have these powerful forces driving growth, but on the other, you have significant inflationary pressures. While we're seeing solid growth, inflation is still a thorn in our side. The latest CPI numbers from this October are hovering around 2.9%, with core inflation at 3.1% as of August. That's still stubbornly above the Federal Reserve's 2% target. New tariffs and shaky trade policies also pose a major risk, threatening to push prices even higher. So what does this mean for your money? It means the market is being pulled in two opposite directions. Growth is pushing your stocks up, but inflation is constantly threatening to pull the whole system down, by making your money worth less and forcing the Fed to keep interest rates high. This creates an incredibly volatile and unpredictable environment that might look like a bull run, but it's hiding some serious risks. This tug-of-war creates a powerful and really dangerous false sense of security. When your portfolio is going up month after month, it's just human nature to get a little complacent. That little voice of caution gets drowned out by the excitement of seeing your account grow. This is when investors start making classic mistakes, chasing hot stocks without checking the fundamentals, ditching disciplined strategies like cost averaging or jumping in late, right as the smart money is quietly heading for the door. Ignoring these warning signs is a massive gamble. The biggest risk in a late-stage bull market isn't always a sudden crash. It's the slow, silent erosion of your wealth from inflation you didn't prepare for. It's watching your purchasing power vanish, even while your account balance looks healthy. Economists call this the money illusion. You feel richer because the number in your account is bigger, but you're ignoring the fact that your dollars buy less and less. The real pain comes when the market finally turns and anyone who was just riding the wave of euphoria gets left behind. It's watching their gains evaporate almost overnight. So, what's the game plan? How do you navigate this tricky market without getting burned? It's not about trying to perfectly time the top. It's about being disciplined. Here are the key strategies experts are focused on right now. At first, don't panic and sell everything. History shows that pulling out of the market too early can mean missing out on some of the strongest returns. Instead, experts advise you to rebalance your portfolio. All this means is taking some profits from your biggest winners and reallocating that cash to stay aligned with your long-term goals. It's a simple way to ensure you aren't dangerously overexposed if one high-flying sector suddenly takes a nosedive. Second, it's time to build a better defense. In a market where both stocks and bonds can get knocked around, you need to diversify into assets that can act as a buffer for your portfolio. This means looking at risk-mitigating assets. Tangible assets like real estate, for instance, have historically performed well during inflationary periods as property values and rents tend to rise. Another powerful tool is Treasury Inflation-Protected Securities, or TIPS. These are government bonds literally designed to shield your investment from inflation, providing a direct hedge. We have two more expert strategies to cover, including the one that might be the most important of all. But quickly, if you're finding this breakdown useful, do me a favor and hit that like button and subscribe. We're putting out content like this regularly to help you make sense of these uncertain times. And your support is what keeps it all going. Alright, the third strategy is for those who want to get a bit more tactical. Think of this as buying insurance for your portfolio. You can consider using protective strategies like buying put options or using managed floor strategies. These act like insurance, aiming to limit your losses to a specific amount, say 10%, while still allowing you to capture most of the market's upside. It's a way to put a guardrail in place against a sudden sharp downturn. And that brings us to our final, and honestly most crucial strategy. Practice radical discipline. This has nothing to do with predicting the market and everything to do with controlling what you can control. Before you invest, define your risk parameters. Set firm stop-loss levels to prevent a small mistake from turning into a catastrophic loss. Decide on your maximum acceptable loss per trade or even per week. Take smaller positions until you really have confidence in a market setup. The traders who survive and thrive are the ones who cut their losses quickly and stick to their risk limits without emotion. So, what's the bottom line? This 2025 bull market is far more complicated than it looks on the surface. It's a battleground between strong economic growth and persistent inflation. Don't let the rising numbers in your account lull you into a false sense of security. The key to not just surviving but thriving is to stay vigilant. Rebalance your portfolio, diversify with inflation hedging assets like real estate and tips. Consider protective strategies, and above all, exercise disciplined risk management. By taking these steps, you can navigate the volatility and take control of your financial future.